Value investing versus growth investing. Which strategy actually makes you more money? Now, most people think you have to choose one, but the truth is, the best investor understand both. Hi, I'm Ace and I built a 400k plus portfolio in just 5 years in my early 20s by using Buffett's values principle, my bachelor in finance and investment, and the real estate cycle. Let's break down the difference between value and growth investing and see which one I use depending on where we are in the cycle. Now, firstly, what is value investing? Now, value investing is about buying solid, profitable businesses below their true value or true worth. Think of companies with PE ratios under 20, strong balance sheet, healthy margins, and return on equity above 15% year over year. These are the names that Warren Buffett loves, boring but durable. They are also the company with big moats, ability to control pricing, ability to move things in the market. Now, how about growth investing? Growth investing is, on the other hand, about companies reinvesting every single dollar into expansion with the promise of big profits down the road. That's why they often trade at very, very high multiples. Think of Tesla, Nvidia, and Palantir, because investors are paying up for future potential. But here's a mistake most people make. They think one is safer than the other. But when the real estate cycle ends, when the market peaks, everything falls, both value and growth. In 2008, it wasn't just high-flying growth stocks that collapsed. Value names with banks, builders, and industrial companies also fell hard. Why? Because panic and forced sellings don't care if you're a value investor or growth investor. So what's the edge? Where's the edge even? It's in stocks that are both. These are companies with strong fundamentals, real profits, and cash flow, but the market has pushed them down so far that they're trading at value multiples. At the same time, they still have room to grow. Think of Meta in 2022, when sentiment collapsed and the stock dropped 70%, but the business was still printing cash and growing users. Or Lululemon today, pulled down but still with a loyal customer base and long runway ahead. This is where cycle matters the most. Late in the cycle, I'm not going heavy in anything. Both value and growth get punished when the reset comes. But after the crash, that's when I look for value stocks or companies sitting in the overlap. Businesses with real fundamentals, temporarily mispriced, but still with growth potential ahead. That's where the 10x setups are shown. Now, I do share breakdowns like this every single week in my free newsletter, link in bio. Now, a question. Do you tend to lean more into value or growth? Or do you try to find stocks that give you both? I'll be reading.